Good afternoon, everyone. We're so happy to be back for our second webinar on navigating your PPP loans. My name is Trilby Lawless. I'm with the Big Time Marketing team, and we want to thank all of you for joining us again, and Matt from Illumination Wealth for coming back to help us out today. If you guys are new around and haven't attended before, Matt is the founder and chief financial life officer at Illumination Wealth and has a lot of great knowledge to share with you guys today. So before I hand it over to him, just a few things to update you guys on. First of all, there is a new loan forgiveness calculator that Matt's team put together, and we will be sending that out after the webinar. So look out for an email in your inbox tomorrow morning with that and the recording of the webinar, as long as a PDF of the slides for you to use as a resource. There will also be live Q&A at the end, so if you have any questions for Matt throughout, please feel free to submit those into your questions box, and then I will be getting those over to him at the end. We'll have about 10 minutes for that. Last time we did get a lot of questions, so if we don't get to your question live, please know we will answer and follow up with you via email and take our time to make sure we get you the thoughtful right answer. So with that, Matt, I'll go ahead and hand it over to you and we can dive in.
Sounds great. Thank you so much, Trilby. It's a pleasure to be back and speaking with you. I know how valuable all of your time is and how important the PPP loan may be for you and your business and your family. So I wanted to share with you today's agenda so you know what we're going to cover. There is a lot to unpack as things continue to unfold. So the purpose of today is not to rehash everything, but really pick up on where we left off last time to discuss what has since changed. So hopefully you have some of the foundational PPP knowledge from our previous webinar or previous learnings that you've had regarding the PPP. So what we're going to do today is talk and review the loan forgiveness application from a high level, because that came out on May 15th. In addition, we're going to talk a little bit about the covered periods. The covered period is very important to understand as it relates to the calculations and your time to spend the PPP loan. We'll also provide some clarity regarding payroll costs and non-payroll costs, and we'll address some of the rehiring, termination, and voluntary reduction exclusions that impact your calculations and your ability to get forgiveness. Included in that will be headcount and wage reductions, forgiveness, and safe harbor discussions. And we'll talk a little bit about applying for forgiveness and key documentation. And then we'll wrap up with some live Q&A. It'll probably be difficult to get to every question today, but we'll do our best to tackle those that we can. And I think it's also important that we just address some of the legal stuff. This is really information. We're not here to give you exactly specific advice regarding your specific situation. There's a lot that goes into everything. And things are changing quickly and rapidly. And you know, I know people want exact answers to their questions, but the situation with the PPP loan is still unfolding. New guidance is still coming out and is yet to come out. There's even the Senate and Congress is going to be voting on a bill to provide more flexibility regarding the PPP loan that might extend this 8-week period to perhaps 16 or 24 weeks. So there's things that are still unfolding, which makes this not a perfect formula or science yet, but being prepared is what's ultimately very important as we navigate the PPP loan and the forgiveness. So kind of jumping in just from a high level again, what is the extent of the Paycheck Protection Program? As it stands right now, it's to provide you with 2 months of forgivable payroll expense, assuming that you keep your people employed during the required period of time. It's also to provide you with some additional funds that will provide forgivable funds as it relates to other business operating costs like rent, utilities, and mortgage interest. And so the key factor surrounding all of this is that 75% of the money that you spend needs to go towards payroll costs. The other can go towards those other allowable expenses such as rent, utilities, mortgage interest, and the like, which we'll touch a little bit more on. But that is the intent of the program as it stands right now. So 2 little columns here. How much can be forgiven? And there's an 8-week expense period. In this 8-week expense period, there are payroll costs, which include a number of things which we'll touch on in a little bit. There is the payment of interest on mortgage obligations prior to February 15th, 2020. Your rent obligations for leases entered into prior to February 15th, 2020. There are utility expenses that can be forgiven, which is, gas, water, internet access, telephone, cell phone, which began prior to February 15th, 2020. And the amount that you will get forgiven on for these expenses will be reduced by any EIDL grant, any advance grant up to $10,000 that you receive. So that's what you can spend it on that can then be forgiven. So, but also there's some things on what you can actually use the funds on between February 15th and June 30th. So a few things to be aware of. You can use it on payroll costs. You can use it on the payments of interest on your mortgage. You can't use it for principal. You can use it on rent, utilities, and interest on any debt obligations that existed prior to February 15th. So you can spend the money on some other, interest that you had in your company, but there's certain expenses that you can spend it on, but they're not going to reduce your forgiveness. They're not going to be allowed for forgiveness. So that could be interest on a mortgage that you acquired after February 15th. That could be rent obligations that you entered after February 15th. So there's things that you can still spend your money on, but it won't necessarily be forgiven if those things came into effect after February 15th. And so if there's money left over after June 30th, there are no limitations on what you can spend the remaining funds on thereafter. So you might have the leftover money that you still need as working capital in your business. After June 30th, under current law, you can spend it on whatever you need inside of your business. But between now and then, there are some specific costs that you need to be aware of. So I think what's also important is that you need to understand that these loans need to be necessity in your business. So it's necessary that there is necessity. You should document the necessity of you obtaining these loans just for own safe measure. And why are we saying this? Because the SBA, they've indicated that it will not question whether or not this necessity was in place for you, and it's not going to refer it to other agencies for it to be explored and investigated further. But the CARES Act says that the loan must be necessary to support the ongoing operation of the business. And the Department of Justice and whistleblowers will not be bound by the SBA guidelines. So if you got a loan at your company and your company has $1 million in the bank, and somebody, and somebody inside your company knows that you got the loan, they could, potentially blow the whistle and, turn you in for that. So it's just something to be aware of. But less than $2 million loans, the SBA has assumed that the good faith certification has been made, so the risk is a lot lower for some of those penalties and criminal and fines that they were discussing beforehand. So I just think it's important that everyone document why you needed this loan, what's kind of going on inside of your business for the necessity of you having this loan and requesting this loan. So let's kind of jump into the PPP loan forgiveness and the calculation. So this is the PPP loan application is essentially 11 pages. The main gist of it is this first page where you're going to have to address information, and you're going to need to come up with a lot of information regarding your employees at different time frames throughout filling out this loan application. So you'll see, like, you're going to need to tell them the number of employees at the time you applied for the loan, the employees at the time of the forgiveness. You're going to need to indicate any advance that you got from the EIDL. You're going to need to lay out your payroll frequency, whether you are weekly, bi-weekly. You're going to need to address the covered period, which we'll talk about in a second, or the alternative covered period if applicable. So those are kind of the key things on the main page of the application. And much of the rest of the application is going to be looking like this, where you're going to have to fill it out, but it's based on worksheets that you're going to need to complete with employee information and salary information. So what we will be providing you and sending you after is an electronic version that can help you calculate and gather this information in a way that mirrors the loan forgiveness application. So much of this information is going to come from completing Schedule A and the following worksheet, which we're going to look at. So Schedule A, this is the big thing that you're going to need to complete. And this is where our spreadsheet will be helpful. It'll allow you to identify all of your employees that were in place in 2019, as well as all of the employees that made greater than $100,000, because you're going to need to do calculations in terms of how much they earned, what their average full-time employee equivalent was, what their salary and hourly wage reduction was. This form, this Schedule A, will be used to populate that data that we just looked at on the prior page. So it's very important that you calculate and get this information completed efficiently and correctly. So that's the high level of Schedule A, of the worksheet for Schedule A. And then there's Schedule A. There's a lot of lines here that you need to be aware of that your Schedule A worksheet is going to help you to create. And one thing that I want to point out is that there's a separate line for compensation to owners. So what this is telling us so far is that owner employees are looked at differently, and they're not included in the full-time equivalent calculation as it stands right now. It's your compensation up to the allowable payroll amount is, but you're not part of that full-time employee equivalent calculation. It's going to look at everybody else here, and so they call that out separately, which I think is important for you to understand going forward. So the worksheet, all of that will help you calculate and auto-populate these key items that will go back onto your loan forgiveness calculation form. And that's going to be required by the banks when you go in and by your lenders to turn this form in. So really important you start to get familiar with this and start to use the spreadsheet and the calculator, start to populate that information. So wanted to talk about the covered period and allowable costs. And these are the options that you have to pay allowable expenses and what they mean. What does the covered period mean? So on that loan application, there's a form indicating, or there's a line for covered period. Your covered period, basically day one of the covered period begins when the loan was dispersed to you, and it lasts for 56 days. That's that 8-week. Your covered period, day one is when the loan was given to you. But what's interesting is that there's potentially different spending periods for your payroll costs and non-payroll costs, like your utility bills, that will explain a little bit more how that relates to your spending of this money. And there's also an alternative payroll covered period for your payroll. So it doesn't necessarily fall within these 56 days. So there's a whole bunch of dates and days that you need to become aware of to figure out what's best for you and your company. And one of the open questions remains is that, will this be extended beyond 8 weeks? And there is legislation that's being talked about this week that might extend it to 16, 24, or even up to December 31st with some cap on how long you have to spend those funds, which might change the entire application process to begin with. So I know we're looking for precise answers, but there's still things that are going to be determined with respect to this PPP loan and your ultimate forgiveness. So the covered period, or CP short for payroll. So I'll just call this the original covered period. This is one method. And the new application talks about payroll costs can be done on a cash basis as well as on an incurred basis. The cash basis means payroll costs are considered paid on the day that paychecks are distributed or the borrower originates an ACH credit transaction. Incurred means it's incurred, but it's not paid for days within the 8 weeks. So you might incur payroll expenses, but then your loan ends, but your pay period happens outside of that 8 weeks. You can still count what is incurred as long as that payroll is paid before the next regular payroll date. So it's not necessarily the cash that went in and went out. So it's important that you are aware of this. And payroll costs are considered to be incurred on the day the employee's pay is earned. So what can happen here is with cash and incurred is that if you got your loan on May 2nd and you had a pay period from April 15th to April 30th, but you don't pay it until May 3rd, that payment can be counted as payroll costs because that went out as cash, and your next 8 weeks can then be included as incurred. So there's the possibility of getting more than 8 weeks of payroll counted as a forgivable expense based on this cash and incurred guidance. So that has significant implications. So costs paid during the covered period are forgivable, even if they incurred before your covered period, but you paid it during that 8-week covered period. And costs incurred during and paid after the cover period are forgivable. That are forgivable provided that the payment of costs is made on or before your next regular payroll date or billing date. But costs that are both paid and incurred may only be counted once. You can't double count. So this means that you can potentially get more than 8 weeks of payroll expenses counted when it comes to forgiveness. I think that's very important for you to be aware of. And that was big clarity that was provided in recent guidance. Could this change? Possibly, but this is how it was written. So the covered period is that 8 weeks from when the loan is dispersed. But there's also an alternative payroll covered period. And this is the period of 8 weeks from the first day of payroll, the first day of your payroll period following the loan disbursement date. So this is helpful for borrowers that have a bi-weekly or more frequent payroll schedule. And here's how that works. So let's say that you received your PPP loan proceeds on Monday, April 20th. And the first day of its first pay period following the PPP loan disbursement is Sunday, April 26th. So you could use an alternative payroll covered period from April 26th through June 20th. That is outside of that first 56 days. You can start your payroll based on the April 26th date for 8 weeks. So there's different things that you need to be aware of with those covered periods, but that is for bi-weekly or more frequent or weekly payroll schedules that could use that alternative payroll covered period. So those are some things to be aware of in terms of how the covered period works. So as we talked about recently, those owner employees, how that compensation was separated on the application. They also made some clarification that any owners who are employees, your compensation is going to be capped at the lower of one of two things: 8 weeks worth of your 2019 compensation, which includes wages, health insurance, and retirement costs, or that $100,000 annualized wages. So let's say as an owner employee last year, you only took a $60,000 salary and you had no health insurance, no retirement costs. The amount that you can get forgiven for your payroll costs this year will be 2019's amount, annualized amount of $60,000. So the guidance is using this to ensure that owners can't increase their wages to use up the loan amount, or they can't bonus themselves to use up the loan amount. So you have your compensation is going to be capped. So if you got paid over $100,000 last year, you can take $100,000 of annualized pay this year. But if you are less than that, you might be limited in terms of what you can pay yourself as an owner under this PPP loan. So another very important nuance to be aware of. Now, I know a lot of people have questions regarding what are included in payroll costs. So here's the high level: salaries, wages, commissions, incentive pay, and bonuses. I think it's important that you know in the recent guidance, in the guidance that came out on the 22nd, there was a question regarding bonuses. Bonuses are considered compensation for payroll costs. So this could help you as an employer to bonus out employees up to that maximum amount of forgiveness for each employee. But still, you can't just bonus just to bonus. It still needs to be reasonable and within the confines of how you operate your business, but you can bonus out employees. Vacation, parental, medical, sick leave, severance pay is included. Wages paid to furloughed employees count towards forgiveness. If you have a restaurant, tips are also included, which I don't have illustrated here, but tips are included in terms of payroll costs. You need to have an accurate way of tracking those or make reasonable estimates. Health insurance is a payroll cost. We believe this to mean health insurance, dental, and vision, not life and disability or workers' comp insurance. Retirement costs are included. This is for 401k matching contributions, pension plan costs. One thing to be aware of here is that the guidance has not specified whether retirement costs are prorated to that 8-week period of time, or whether you can make a lump sum annual contribution during this 8-week period of time as well. Also, state and local taxes are part of payroll costs as well. So that's a high level overview of what's considered payroll. Now, non-payroll costs. These are things that can be forgiven as long as they were in place before February 15th of 2020. Utilities, this is your phone, your internet, your gas, your electric, water. There's still that talk about transportation, which doesn't have clear guidelines of what that specifically means, but it might be the transportation for those utilities. There's sometimes access charges for certain utilities that might need to be detailed further what utilities specifically are. But rent and lease. So the recent guidelines talk about real or personal property. So this appears to mean that not only your commercial office lease could be included, but your copier, if you lease that, car leases, truck leases, personal property is included. There's also vagary regarding will common area maintenance and property taxes be included as far as a rental payment, because it could be part of your rent check. So some of those things aren't specified yet in any of the guidance, but may very well be an allowable payroll cost at the end of the day. So mortgage debt interest also is a forgivable expense. Principal is not included. So if you own a property that houses your office, your interest on that is forgivable. The principal is not. And they also clarified that prepayment of your mortgage interest is not possible as well. There's also the ability to have interest on other debt paid using these expenses, but you can't use it and it can't be forgiven, a forgivable expense. So those are the non-payroll costs. So there's a couple things to be aware of as it looks at these expenses as you're spending the money for these non-payroll costs. There's multiple timeframes to look at these expenses. One, they can be paid during the covered period. So what I mean by that is this could include payments for those allowable expenses that you paid during your 8-week period. The cash went out, but they were actually for a prior period. Now, what does this mean? Let's say you received your loan on May 1st. You talked to your landlord about deferring rent in April, and you didn't pay April's rent. You could pay April's rent in May, in that covered period, using your PPP loan. That's the cash that went out the door. You can also then use your PPP loan for expenses that were incurred during the covered period. So then you can also pay May and June's rent for that next 2 months or that next 8-week period, because you now incurred those expenses. So you potentially could have more than just 8 weeks of expenses paid during this period. And so if you incurred a cost during the covered period, and then as long as you pay, and then your 8-week loan period ends, as long as you paid that bill, that utility bill, before that next really regular billing date, you can get forgiveness on that, even if the billing date is after the covered period, that 8-week period ends. So this allows you, gives you some flexibility to get those costs paid, even if the billing date is after the covered period. You're going to need documentation and your invoices and of all this stuff when it comes time to forgiveness, but it's important to be aware of how that works when it comes to cash and the incurred. But remember, for non-payroll costs, it remains limited to no more than 25% of the total forgiveness amount. So, even if you get your April rent paid during the 8-week period of time, as well as May and June's, and you have 3 months of rent, you still might be capped out. So that's why they're not making so much, they're not making a huge deal of this, because they know that those expenses are going to be limited. But generally speaking, they're trying to provide you with 2 months of non-payroll costs, but you can potentially get more in there when it comes to forgiveness. So reductions in forgiveness, this is a big deal. So your loan forgiveness is going to be reduced proportionately if you decrease your full-time employee headcount. So how do reductions in forgiveness work? First of all, in order to get forgiveness, 75% of what was spent has to go to payroll costs. If you only spend 70% on payroll costs and 30% to utilities, you're not going to get full forgiveness, because 5% went to utilities more than it should have. So Your loan's going to be reduced proportionally if you decrease your full-time employee headcount. And then it's also going to be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000 annualized in 2019. So how do we avoid reductions in forgiveness? So we need to make sure that our full-time employee headcount gets back up to levels that it previously was at. We also need to make sure that wages are brought back up to where there's not a reduction of 25% from where they previously were. And so you have the ability to rehire employees until June 30th to get them to their salary levels and their full-time hours for changes that you made between February 15th and April 26th. You can make these changes back even if this is after your loan window. So if your loan ends on June 15th, you can still make these changes by June 30th. And there's some new safe harbor provisions that we're going to talk about in a second. So I think what's really important here is how do we determine what is a full-time equivalent employee in that calculation? I know there's a lot of numbers here. There's a lot of calculations. This is why we really need to spend time preparing. There's two options that are allowed for figuring out your average full-time employee equivalent. There's a detailed calculation that you can run, which basically for every employee, you're going to take the average number of hours per week, you divide that by 40, and then you round that to the nearest 10th. So if a full-time employee equivalent is equal to 1. So if somebody only works 30 hours, you would divide 30 divided by 40, that's 0.75%, and you round it to the nearest 10th. But on the interim rules, it actually talks about rounding to the nearest 100th. They talk about 0.75. So it's not completely clear, but that's the detailed calculation. There's also a simplified method. So they're looking at 40 hours a week. If somebody works 4 hours a week or more, they're a full-time employee equivalent. Anyone less than that is not a full-time employee equivalent, which is why it's important. There's also a simplified method. So for each employee, you can assign a 1.0 to anybody working 40 hours or more, and 0.5 to any employee working less than 40 hours per week. So this could be really valuable, but you have to do it across the board. You can't do a detailed calculation for one and a simplified method for another. You have to pick one version and use it consistently. And these calculations are going to be based on your full-time employees on the covered period or that alternative payroll covered period, and you're going to compare versus their historical periods when it comes to the forgiveness calculation. So here's why it's really important to do the math. For example, let's say you had 10 people working 38 hours a week. That can be equivalent to 5 full-time employees on the simplified method if we're using 0.5. But if we're using the detailed calculation, it's going to say that you had 9.5 full-time employee equivalents. Now think about that. When it comes to rehiring or getting back to the levels that you need to be at, you might want to use the simplified method in some cases. Other cases, for other companies, you might want to use the detailed calculation as well. So this is where your own specific company scenario is going to have a big part in your calculation and making some hiring and rehiring decisions. So how do you get relief from any headcount reductions? So this is some new news for people. A lot of fear was out there that people are getting more on unemployment than they are coming back to work. But you need to be aware of that you will not be penalized if for a full-time employee equivalent for people and employees who declined an offer to return to work. So if you offered an employee to come back at their prior wage and prior hours, and they determined and they said no, they will not need to be included, or they can be counted as part of your full-time employee equivalent. However, it requires that you pretty much rat them out and tell the unemployment insurance office within 30 days that they declined coming back to work. So even if they're getting more money, you can get that. You're not going to be penalized if they say no, but you have to notify your state employment insurance office. Your full-time employee headcount will not be impacted if you terminated somebody for cause, if somebody voluntarily resigned, if somebody voluntarily requested and received a reduction of hours, say they needed to stay home and take care of their child at home during school. So you're not going to be penalized in that full-time employee headcount because of those situations. The key is that you document all of this. You need to have written documentation for all of these scenarios. And you can't double dip. You can't have somebody who declined an offer and then you refilled that position, and you can't count them and then count the fact that you refilled that position with somebody else. So the key is that borrowers are not going to be penalized for changes in employee headcount that are a result of the employee actions and requests. Really important part of the conversation. So how do we then avoid reduction using this safe harbor? So you will be exempt from a reduction in your loan forgiveness based on that headcount, that full-time employee equivalent, if both of the following conditions are met. You as the borrower reduced its full-time employee equivalent levels in the period of February 15th to April 26th, and you restored them to levels that they were at no later than June 30th, 2020, in the borrower's pay period that included February 15th, 2020. So you restored that headcount by June 30th to the levels that you had in place during the pay period of February 15th, 2020. So there's a couple other nuances to be aware of, but you need to bring people back by June 30th, and it needs to be at levels that were at in place from February 15th, 2020. So a few questions remain. How will June 30th, 2020 actually be measured? It's likely going to be the payroll period that included June 30th. You're likely going to have to show them that payroll period that included June 30th to prove that your payroll was at that level or your full-time employee equivalent was at that level. But now that there's talk of extending the covered period beyond 8 weeks, will that 6/30 cure date that, to get people back be changed? Still up in the air. This is why, we got to stay on top of this week in and week out. Now, as far as wage reductions, that's another place that you can be penalized if you reduce wages beyond 25% or more. So there's two calculations that you're going to need to run. Salaried employees are going to be based on their average salary over that period of time. Hourly employees are going to be evaluated based on their average hourly wage. So you're going to look at your covered period or your alternative covered period, and they're going to look at their average hourly wage over that period of time. So you're then going to compare between the 8-week covered period, excuse me, versus the average of the 13-week period of Q1 2020. You're going to have to look at the wages compared to Q1 2020. That is the reference period. So you're going to have to look at this for all of your employees on a per employee basis. You can't group everybody together. And so what's also important to note is that to ensure that borrowers are not doubly penalized, the salary and wage reduction applies only to the portion of the decline in salary and wages that is not attributable to the full-time employee equivalent reduction. So let's say that you reduce somebody's hours by 30%, which then also reduce their wages. You're not going to be penalized for both. As long as their hourly wage stayed consistent. That is what you need to, that is the thing that's going to be, counted. You're not going to be penalized for both of those things. So what do we need to do to avoid reductions to our forgiveness based on the fact that we reduced people's wages along the line? So the SBA clarified that the borrower is exempt from a wage reduction penalty if one of the following conditions are met. The average annual salary or their hourly between February 15th and April 26th is equal to or greater than their annual salary or hourly wage on February 15th, or their average annual salary or hourly wage on June 30th is equal to or greater than the annual salary or hourly wage on February 15th, 2020. This is all done on an employee by employee basis. Everyone's looked at individually for the reduction. And the reduction is based on only that 25% threshold. If anyone was reduced by 10%, there's not going to be a penalty by reducing their wages 10%. So
Hey, Matt,
now I want to talk briefly just about applying for forgiveness and getting organized so you can apply efficiently. So remember, what is your forgiveness amount going to be based on? Well, it's based on, it's not based on 75% of the loan amount on payroll costs. So you don't need to spend all of the loan. Your forgiveness is based on the amount that you spent on payroll costs divided
Hey,
by
Matt,
75%.
sorry to cut you off, but this is your 5-minute mark.
Perfect. Sounds great.
Thank you.
So we will be wrapping up shortly. And so your forgiveness amount is based on the amount spent on payroll costs divided by 75%, not to exceed the original loan amount. So you don't need to spend the entire loan, just so you're aware of, but your forgiveness will be based on what you do spend, as long as 75% of that goes to those payroll costs. Accrued interest on the PPP loan has not been addressed. So will it be forgiven? We don't necessarily know quite yet, but we'll figure that out. And then any amount from the EIDL, the advanced grant, is going to be reduced from the amount that's forgiven. So applying for forgiveness, we need to think about this because there's a lot that's still unknown. But part of your responsibility is to start to get organized and do these calculations now to strategize. Start filling out the spreadsheet, start getting the application created and becoming familiar with it. I think it's really important, as we talked about, there is so much data and information that we just talked about today, it can make your head spin. So I think it's really important that you engage a qualified advisor to really help you navigate this and help you fill out your forms correctly, help you run scenarios. And it's probably advisable to wait for final rules to be in place before submitting. Things might be changing this week or next week. And many people, the first loans that were issued in early April, they're about 6 weeks in. You can then apply after your 8-week covered period ends. So they're getting close to that 8-week covered period, but there might be things that now change the way that they spend or change the way they fill out that application that you need to be aware of. And so what are you going to do? You're going to be applying to your lender. Your lender is going to be you're going to be needing to complete the application and submitting it to your lender. And just like the overwhelm that was happening when on the application process, I would prepare yourself for the lenders being overwhelmed when everyone's going to be submitting their forgiveness as well. Just prepare yourself for that, and also prepare yourself for your advisors, your CPAs, whoever's helping you with this, to be overwhelmed as well. There's a lot that needs to happen for you to apply for forgiveness. Now, please note that once you do apply, the lender has 60 days to review and issue a decision regarding forgiveness. And then the SBA has 90 days to remit the amount back to the lender. So you can kind of see that even though you don't have a payment to be made, you can defer your payment for those first 6 months, or your first 6 months or thereabouts. You might have to be paying down this loan just based on the time frame for how this all might work out. 2 months of the loan, 60 days to review. The SBA has 90 days to remit the amount to the lender. By the time a decision is made and forgiveness happens, you might already be paying down some of that loan because of that. And you're going to need to retain your PPP records for 6 years. And so what are some of the keys to successful forgiveness? You need to complete the package of documents. You need to have a paper trail with all the supporting calculations. You need to make sure your documents are organized and easy to follow. You should have all the optional documents prepared and ready in case of a request. You need to have the application completed, and you should have those optional schedules filled out. You need to make sure everything's filled out correctly, filled out thoroughly. And a lack of documentation or incorrectly prepared applications is just going to slow down your process. So what are some of the required payroll documents? Page 10 of the application lists everything out, but you're going to need to submit certain things to your lender, such as your payroll documents, your full-time employee equivalent backup documents. I know a lot of the payroll providers are going to be providing that for you and helping to make sure that you can easily submit, and all of the non-payroll items that will be in place. So they must be kept. And so right here, we have a list of all of the required payroll documents. You're going to see there bank account statements, third-party payroll reports, tax forms, your tax filings, receipts, canceled checks, account statements related to the contributions to the health insurance and the retirement plans, required full-time employee documents. You're going to need to show all the average numbers that you had in place for various time frames. It's going to be really important to get really organized, as well as your non-payroll documents, copies of invoices, copies of your lease agreement to prove that you had it in place prior to February 15th, 2020. So a lot of documentation is going to be required, which means that we just need to be really organized around our application process and in order to get forgiveness. And then there's a lot of documents that you're going to be required to maintain but not submit. We don't need to get into all of these. You're going to get a handout and you're going to be able to see what's required of you, but you're going to need to have documentation supporting your wage reduction calculations, your full-time employee equivalent calculations. That's all going to need to be documented, which is where this calculator will come in handy. So I know we just unpacked a lot. I know that there's likely going to be a lot of questions, and so we'll do our best to take some questions now, and yeah, fire away.
Awesome. Thanks so much, Matt. And before we dive into the questions, just to reiterate, we will be sending out a recording of this whole call along with a PDF of the slide deck, so you'll be able to look back at all the slides and get more information there. But first up, we have a question from Pete here. He said, any indications yet on the tax consequences of the forgiven amount? Will it be considered taxable income?
Yeah, so a couple things. The forgiveness amount is not going to be considered taxable income. As it stands right now, though, the IRS has said that the expenses, the payroll expenses, the utility expenses are not going to be deductible expenses on your business tax return. So you can't double dip where you're going to get the income not taxed. You're not going to, at this point, not be able to then get a deduction, a business expense deduction for those expenses that you were then forgiven. So you can't double dip as it stands right now, but there is also some conversation and legislation to also allow those expenses, the payroll expenses, to actually then be a deduction on your tax return. As it stands right now, the forgiveness will not be taxable income, but you can't then write off those expenses and get a tax deduction on those related expenses. That might change though. That's, we just got to keep our eyes and ears open.
Perfect. Next question here from Robert. He asks, does a sole proprietor have to write checks to themselves to qualify for forgiveness, as the SBA is all over on this?
Yeah, great question. As far as the wage replacement goes, and much of our conversation today, I know, dealt more with business, corporations and Schedule C filers. There's some nuances for those sole proprietors and independent contractors. As it stands right now, that 75% of your loan amount is just automatic forgiveness. It just goes towards your wage and salary replacement. You don't need to write yourself a check for your salary. It's just going to look at your net income, Schedule 31. 75% of your loan amount is essentially treated as wage replacement, and that's automatic. Now, as far as the other 25% for rent or utilities or any of those other allowable expenses, you will need to have documentation that those expenses were in place before February 15th and voided copies of checks and bills that you paid for those related expenses. But the 75% related to your wage, nothing needs to be done there. It's just automatically forgiven, essentially.
This next one here from Debbie asks, in the first quarter, we were given a bonus, and we are concerned that it will look like salaries were cut in the forgiveness calculation. Do we need to include the bonus in the cash compensation calculation?
They're going to look at the bonus, but you're going to have different reference periods that you can then use to get your full-time employees back to where they were. So the wage reduction, yeah, I'll probably need to, Debbie, I'll have to show you the calculation, how the calculator works, so that you can see exactly how it will. But there's different reference periods for that calculation. So I'll circle back with you specifically on that one. It's a very good and important question.
Perfect. This next question here is from Joanna. She said, on the PPP application, you had to mark the purpose of the loan. Can you use the funds for rent, utilities, etc., if you didn't mark them on the application?
Yes, you can still use your PPP loan for all of those allowable expenses, even if it wasn't marked on your application. Your loan amount is your loan amount, and there's allowable expenses, and you can use it for all of those allowable expenses within the framework of 75-25.
This next one here is a good general one. This one's from Brianna. She asked, how does the application for forgiveness, or sorry, how soon does the application for forgiveness need to be submitted after our 8 weeks?
It's not required that you submit it right away. I believe, I'll have to double check. I believe that the forgiveness might need to be submitted by the end of the year, but you have time to let further guidance come out to help you adjust your application specifically. But you could apply as soon as that 56-day period ends. And there's been different people talking in different ways. Some attorneys are advising wait until full guidance comes out before applying, so you don't necessarily want to apply. Other people have said apply right away so that you can get approved before they change things on you. So there's a few different schools and trades of thought out there, but since this whole loan thing might be extended, I think we should be taking our time and making sure that we do this right.
Interesting. Next here is from Mary. She asked, if an owner did not take wages in 2019, they only took draws, but they are taking a salary in 2020, will that salary be forgiven in the PPP loan?
So your salary, so I'm just trying to think about all these specifics. Sometimes it's hard to give advice not knowing the whole picture, and guidance giving the whole picture. Let me think about this. So there was no salary taken in 2019, in 2020. So based on how it's written now, if you took a low salary in 2019, you are going to be limited, because if you were around for the full year, if your company was around for the full year and you didn't take much salary, you have to be limited to your 2019 compensation or the 15,000. And so if 2019 was zero, you're not going to be, as it stands right now, you're not going to be able to get forgiveness if your company was in existence for 2019, unfortunately. So some people who for tax planning purposes took low wages, low salary, they're going to be impacted in what they can get forgiven now based on what they've been paying themselves in 2020, unfortunately.
Thanks, Matt. We'll do one more question here before we wrap it up. This one's from Ava. She asked, if we furloughed employees and paid severance before the 8-week period began, can we submit those severance payments for forgiveness?
Severance payments can be included, but this gets back to the cash incurred. So if you haven't paid those yet, if you furlough those employees earlier, and now you've got your loan, you can then write the severance checks now, and that can be included. But if you already had cash go out the door before the covered period, it wouldn't be included. So if there's other employees that, let's say, you let go prior to this, and now you've got the loan, you could write a check now and have that be included as a payroll cost and a potentially forgivable expense. But you can't go back outside of that period if you've already written the check.
Got it. Well, thanks so much, Matt. Unfortunately, that's all the time we have for questions today, but if we did answer your question live and you'd still like some more insight on it, feel free to respond to the email with the recording and we'll make sure to follow up with you further. And for everyone's question we didn't get to, we will reach out to you as soon as we can. So thank you all so much for spending your afternoon with us. Thank you, Matt, for coming back to share more insight with everyone. We really appreciate it. And we'll talk to you guys soon.
Thank you. Have a great one. Thanks, everybody.